Hi everyone, I'm Thomas from AIA Investment Management. In the next couple of minutes, I'll be running through with everyone some global market highlights as well as important key investment message to navigate the market in current climate. First, let's take a look at market performance. Global equity indices have rebounded from the 8th April low on the back of some tariff reprieve from Trump. As you can see on the left table, major equity indices have regained some lost ground over the last 1 month as of 2nd of May. Next, let's look at key US economic data. Most data remain decent. First, inflation data as shown by personal consumption expenditure, it came in at 2.6%, one of the tamest level in the last 5 years. US employment as shown by non-farm payroll added 177,000 jobs, better than expected. Thirdly, Q1 US GDP shrunk by 0.3%, largely weighed by Trump policy on business sentiments, as well as a surge in import ahead of Trump tariff. Next, let me bring everyone through some key developments around Trump tariff. As we all know, rising US-China trade tension and Trump tariff hikes are straining global growth as well as sentiment, which is the reason why most recently we have seen the IMF cutting its 2025 global growth forecast to 2.8%. And right now, China faces as high up to a rate of 245% in terms of US tariff, and it has hit back with 125% tariff on US goods. Most recently, over the last couple of weeks, we have also seen some market relief on the back of some tariff reprieve, which is firstly the 90 days tariff pause, as well as the tariff pause on consumer electronics. Recently, Trump has also hinted and acknowledged that the high level of tariff on China could come down substantially in the near future. So moving forward, investors should closely monitor diplomatic developments between US and China, potential changes to the 90 days tariff pause, and the ongoing adaptation of global supply chains as companies adjust to this new trade reality. So, how should an investor be managing his investment in such an environment? We have 3 important investment messages to share with everyone. First, staying invested and maintaining a well-diversified portfolio is important in such an environment as long-term discipline matters. Second, time in the market is far more important than trying to time the market, as we all know we are never able to get our timing correct all the time. Third, if we attempt to time the market, missing out some market best days can affect long-term returns. As you can see at the bottom of your screen, the chart shows clearly that by missing out market best 30 to 40 days over the 10 years period as illustrated, an investor would start to lose value in his investments. So, how can AIA help our customers better manage their investment? Through AIA Stewardship, we partner leading investment managers to build optimized portfolios that are in line with customers' risk-return appetite. Over the investment journey, we apply constant monitoring as well as active portfolio management to ensure that their portfolio can and is well adaptable to changing market conditions. Now, this is something especially important in such uncertain and volatile period. At the end of the day, it's really to help our customers to stay invested over the long term to ensure that they get full market cycle return. And what are we trying to do is really at the end of the day to help to reduce some very common customer pain point, things like I don't know where to invest, I don't know how to invest, I don't know how my investment is doing, there's too much news going on, I don't know how to make sense. And importantly, also to reduce some very common behavioral biasness, for example, buying high, selling low. All right, with that, I'm signing off and thank you very much for your time.